dance with me, move your body, 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 your legs with beat.
Welcome to Market Makers, everyone. Hope everybody had a fantastic elongated holiday weekend here in the USA. We had President's Day yesterday. Cash markets were closed. Cryptos trade 365, and today is a pan sell-off. What does that mean? Everything's down. Gold was down over 3% this morning, so you have the metals complex down, cryptos are down, equities are down, everything's down. So what's the best thing to do today? Let's revisit key support levels, key resistance levels. Are the uptrends intact? Are any downtrends forming? We're going to look at that in the charts today, guys. Got a lot to go over. Everything is timestamped below, so you can check out your favorite assets. Highly suggest you watch the front end here on the markets, even if you're just a crypto guy, because this will dictate the health and welfare of the market, the largest markets in the world. Now, this video is brought to you by SimpleFX, guys. If you want to trade anything globally, global equities, commodities, including the metal space, Forex, cryptos, be a market makers VIP. If you live outside the USA and Canada, check out our SimpleFX link. It's right there in the video description. If you want to trade cryptos anywhere in the world, check out Bitunix. Again, be a market makers VIP. If you guys like my videos, check out our memberships there on YouTube. You can click the join button, get my video updates throughout the week, our block state updates throughout the week, and you can jump over to our Discord as well. Be sure to like and subscribe. Let's kick this off. ES. Now, I've covered the patterns many times on ES, right? The macro patterns, the 5-wave fractal, 3 waves to a top. Just want to focus on this for just 1 second here. Just the geometric mathematics here of the marketplace, because I find it fascinating that so few people, if anybody, is talking about it from this perspective. Now, you guys know I believe the 2020s are similar to the 1920s. How similar are they to the 1920s? I think they're going to play out possibly the same way up to and including the potential ending of the 2020s. But let's talk about this. 1918 to 1920, the Spanish flu. Millions of people died. The stock market crashes. Fast forward 100 years to the year after the Spanish flu ended, we had the CV-19 pandemic, stock market crashes. Now, back in the 1920s, what happened next? The market bottoms. Tariffs are introduced, the largest tariffs in U.S. history, average tariff rate of 40%. What does the stock market do? Does it crater? The stock market goes up 500% to September 1929. What about inflation? Must have been massively inflationary, having the largest tariffs in U.S. history. Nope, inflation was under 2% for the decade. The stock market goes up 500%. Where are we now? We had the market crash back with the pandemic, the market recovery. The largest tariffs have been introduced since the 1920s. Our effective tariff rate's 13.2%. Theirs was 40%, so ours are significantly lower. And what happened after those tariffs were introduced? The strongest turnaround rally in stock market history. That's where we are. We are in year 6 in a decennial cycle, which is highlighted typically with volatility. We have a couple subcycles going on. We have the January effect, first 5 trading days being higher. We know with 200 years of market data that 85% of the time you finish the year higher. However, we have the midterm cycle as well later in the year. Like we've been talking about, you could have as many as 2 retracements, one of them being very large in this cycle. So it's key to kind of understand the macro perspective. Right now, there's a lot of fear in the market. That fear is AI is replacing jobs. The AI trade's overdone. The jobs market's not as strong as it should be. Yada, yada, yada. That's the bearish case. The bullish case can be really distilled down to one factor, and that is earnings. Listen to this. Lee, roll it.
What's the argument for the index, for the S&P, for the market cap, S&P500? What's the bull case?
Earnings have been phenomenal, and they're going to be at a, when all the data comes in for the fourth quarter earnings reporting season, it's going to be at an all-time record high. I thought that we're going to get something like $310 a share for the S&P 500 this year, but the analysts are already up to about almost $320 a share. And then for next year, I thought 350, and the analysts are already talking about 360.
S&P earnings are set to finish at an all-time high. That's the bullish case. That's the bullish catalyst. Doesn't mean you won't have retracements. On my screen, market symmetry, the geometry of the market. What was the wave from the pandemic up to the 2022 all-time high? That was 2,600 points. 2022 low, all the way up to the 2025 high, 2,600 points. If we complete this April 7th low of 25 up to 7,500, that gives us market symmetry once again with a 2,600 point wave. 3 primary waves of 2,600 points. Could be what? A coincidence? I don't believe in coincidences. Synchronicity is the actual word you want to look for here. What about the retracements? 2022 retracement, 1,300 points. What about the retracement from the tariff sell-off? 1,300 points. If we get our wave up to 2,600 points, which is 7,500 on ES, a 1,300 point retracement takes you right back to the prior 2025 high, which took you back after that sell-off back to the 2022 high. And after the 2022 sell-off, took you back to the pandemic high. You got a throwback. This is so important to understand, and you can even look at this from a fractal perspective, which is really interesting. If we look at this from a fractal perspective, go back to 2021. Let's say we're right here, right? We're just right there before that final point surge. Well, if we add this to the breakout level right here, where we are, get that final move up to 7,500, what would the retracement look like? We have the point total, right? 1,300 points. If it's symmetrical, there's no guarantee it would be. But if it was symmetrical, 1,300 points. But again, do you understand the law of alternation? Ralph Nelson Elliott wrote about this as well. Law of alternation. We had a sharp decline over here in 2020. Steep and sharp. We had an elongated 5-way fractal down decline over here in 2022. Can denote this here with our wave system. Go 3, go 4, go 5. And no, I do not trade an Elliott wave, but all patterns in markets occur in fractals of 3s and 5. 5-way fractal. So you had sharp decline, elongated decline, sharp decline for the tariff sell-off. If you believe in alternation, you could have an elongated decline here. So what would that look like? Well, let's just take this bar tool once again. Let's just copy. Let's just copy this 2022 decline. Let's stick it up here. If we got to 7,500, where would that end? Look at that. The exact throwback of the February 2025 high. Again, every major retracement has thrown back to the prior high in this whole market cycle. Pretty amazing when you look at it from that perspective. That's the part that interests me, is the geometry. The question is, can we get up to 7,500? What's our resistance levels? What's our support levels? Markets are selling off as I'm writing. Does that mean we're crashing? Let's look at some other indicators here. What about the RSP, the equal weight? Validated uptrend. There's your trend line. Very simple. Everybody can do basic trend lines. Validated uptrend. You have new all-time high as recently as last week. Prior trading day, actually, on the RSP. Breakout, right? So you have a breakout in the RSP. I have higher targets, 211 and 225 if we were to climb higher. Equal weight. What about Dow theory? Over 100 years old. Wall Street uses it. Why? Why? Because it works. That's why it's still used over 100 years later. Validated uptrend above the trend line of support. We hit our target for 2025, which was 50,492 within 100 points. If you are not trading with Fibonacci patterns, highly suggest you check out my education course, because in 25 years of trading, I haven't found a better way to trade to get targets so close within 100 points on a $50,000 asset. Pretty amazing. It got there. Validated uptrend. So for Dow theory, you need the industrials to be rising, as well as confirmed by a breakout of the transports. Dow transports, new all-time high last week. 5-year accumulation pattern. And you can argue just like you can now. Look at this. This is zoomed out in a 3-day chart. Is this bullish or bearish? Fact of the matter is you were trading in a very broad range, 18,000 to 12,000, eventually leading to some classic market geometry here of a low, a higher low, a breakout, also a W fractal, also an ABC. Understand the patterns in the market, but you broke out to the upside, Dow theory confirmed. So you have all-time high in S&P earnings. You have Dow theory confirming a bullish market. What's the downside here? The downside is if we start losing support, watch your VIX, because our VIX target, which we predicted, came true, 25 to 29. That was at retracement back in October. What did we do over here in November? 25 to 29. If we dip a little bit more going down into our support zone, I'm going to show you here on ES, watch for VIX to top out potentially to 25 to 39 like it did on the 2 prior retracements where everybody told you the market was going down 50%, only to go on and make new all-time highs. That's your resistance zone. If it's a major retracement, you're going to break out above 29 and go into the 30s, and that would be a major retracement. Let's look at ES here. So what did ES do? Trendline concepts. You broke your uptrend here. Where's my brush? Here it is. You broke your uptrend. Does that mean you're in a downtrend? Well, I zoomed out intentionally. Here's your April low. Does this look like a downtrend? No, this is a linear market. This is building a line. This would be called now by a lot of traders a Wyckoff fractal that actually understand Wyckoff, but this would be called a Wyckoff fractal. What does that mean? You're range bound. You're trading sideways. You have a clear area of support. The problem, I think, is because I see people arguing all the time on X, we're in a downtrend, we're in an uptrend. Well, if you're looking like on an hour chart, surely the last few days look like an obvious downtrend. You zoom out to a daily, a 3-day, a weekly, zoom out to a key level. What's the key level? April 7th low, where globally every market, including crypto, sold off, and then you had the massive rally. What's your key support level? You have higher highs, higher lows, all in the uptrend. Your key support level here is your lowest low before your all-time high, which is right there at 65.25 on ES. To be in a validated downtrend, you have to take out your lows over here from November that you made, or back here in November that you made, these smaller lows. You have to come through here in this support zone, and this is like a caution flag, a yellow flag. You come down here, are you in a downtrend? Nope, you're still in a sideways market. Why? Because your low is the base here. You have to take out 65.25. If you take that out, you have broken the uptrend. You've taken out a key support low and broken the uptrend. Now you're in a downtrend. Now, the way most people trend trade is quite simply, if you're in a valid uptrend, which you can see you're clearly in a valid uptrend, whenever the market pulls back or goes sideways, your bias should still be to the upside unless you take out the key support low. That's typical trend trading, okay? So if you come in here and you're range bound, is that bearish? Yeah, short term, near term, it's bearish. If you hold support, nothing's changed. If you break this, you come down, maybe you retest it here and you break down, you're in a downtrend. You change trend. Now your bias is to the downside. But right now you're linear. You are sideways right at the target, 6,991, and you're just going up and down, and people are screaming at each other on X. I see it on YouTube, debating whether or not the market's crashing 50% or not. You haven't even taken out your primary support yet. So to me, it's a neutral market. My bias, as you guys know, is to go on to 7,500 for the symmetrical moves I just laid out for you in the previous chart. Does that mean it will? No, but that's my bias. When is my bias going to be flipping to the other side? My bias will flip if we enter a downtrend and break a key support level. That's when my bias will flip. Clearly, we are retracing at that point. We're not even in the support zone yet to even be considering what types of bearish patterns we're making. We're just chopping in a sideways market. We look at NQ, same thing. Uptrend trend line is broken. Your April lows are present. Uptrend trend line broken. You're going sideways. You're in a range. There's your November low, your key low. Now, NASDAQ is much closer to that key low because that key low is 23,900. Right now, you're at 24,600. So if NASDAQ was to break down and lose this key low, you have changed trends. You are in a downtrend at that juncture. Right now, You're linear, you're sideways, chopping up and down. And this is why trend trading exists to begin with, guys, because most people will tell you, don't trade these markets, they'll chop you up, which is very true, right? You develop a bias, I think it's crashing, and then it whips up. And then you exit your trade, you get stopped out. Then you're like, oh, it crashes back down again. You enter your trade on a short again, then it whips up again the next day. That's what sideways markets do. That's why most people try to trend trade, which is to break out above resistance would be the uptrend, above 26.4 or below 23.9. Those are your two trends, up and down. This is neutral. This is sideways. However, I believe the bias is higher because of the elongated uptrend. Until you break the key support level, you're in a neutral linear market to the upside. If we look at this on the Russell, just like the Dow, is in a valid uptrend. You have not broken the trend line. The Russell's the easiest to see this in. You have the April lows. You have multiple highs. Let's just look at the major ones. Multiple high, new high, higher low. New high, higher low, new high, higher low. I mean, you just have a valid uptrend that's continuing with your trend line intact, with your 18 RMA moving average intact. This isn't in danger of collapsing. You can have a bias that you think it will collapse because you watch somebody on YouTube. That's totally valid. You can have that bias. But until you see it in the technicals, it's not collapsing. Let's look at fear and greed. We are in 33 in fear over here on whatever that is, CNN fear and greed. So at crypto fear and greed, we're still at 13. Let's jump over to the cryptos. Everybody's fearful. Made a video last week. We just went over Dow theory. I made a special video last week on Bitcoin and the IGV. Made that video, put it on YouTube and X. By the way, give me a follow on X. So Bren theory. What's Bren theory? It's just a theory I made up, but I think it's really important to encapsulate because Dow theory, you have to have the Dow Industrials, the transports confirm each other. Cryptos, no, it's only been around since 08, 09. And to me, crypto, since I came into crypto back in 2020, 2021, it's tracked so closely to the NASDAQ. It had at different times an 80% correlation coefficient with the NASDAQ. And now what it's tracking to, I made this video, is the IGV, which is a subsector of the NASDAQ, particularly tech software. This is a 0.73% correlation coefficient on a 30-day rolling basis with the IGV, and you can see how closely it's correlated. 0.73%, extremely closely correlated, because as you know, the NASDAQ hasn't broken down yet. So again, I like to look at the IGV, like I showed you in this video. $76 is a very key level in the IGV that's been visited. You're at $80. Obviously, if the IGV does wash down some more, that can put pressure on crypto. And if you look at these other levels where crypto was back in March 20 or April 2025 over here, you have these different levels in crypto. You had 74K here, you had 50K over here. So just keep that in mind. When $75, $76, if it gets hit, crypto's had a lot of selling pressure. So that's something I like to track. What do we have? We have, this will make Confucius happy on the Discord. We have the eclipse, or not the eclipse, the total, this is a annular solar eclipse. And it's only visible, the Ring of Fire is only visible over Antarctica, or as my Iraqi friend Bashar says, Antarctica. But that's where the Ring of Fire is visible. But we do have the eclipse. It's a new moon today as well, which also means it is a pivot day. So as we can see, we've had pivots. I go over this all the time, including the all-time high to the exact day of the full moon. I use lunar cycles as potential pivots. Every pivot has played out either sharpening the drop or the rise or a change in trend. Will this be a change in trend pivot to the upside? Will we just have more volatility up and down? We shall see if we get some type of play out of it. But I like to track these. Again, it's not about trading off of them. It's about using them for confluence. Are we at key resistance, key support levels? What's the market's doing? Now, if we were to get a larger flush out in Bitcoin, we're going to zoom in and look at this. I showed you this before, but AB equals CD. This is a Gartley pattern, as well as an ABC. I had my targets down here at 52,382. The 618 off of the 2022 low was 57. Bitcoin, of course, fell to 59 and change. So it didn't quite hit the 618. This is still an extremely strong decline. Will we get a stronger decline? If we get a further washout, my target was 52. And of course, psychologically, you could probably round that to 50 because that's what a lot of people will just say. I think Bitcoin's going to 50K. Nobody says, I think it's going to 52,382. It's just how human psychology works. We zoom in on Bitcoin. What's the danger of falling down? Are we in a pattern that's showing us that we're falling down? We look at Bitcoin here on the 8-hour. Obvious pattern you have here is an M top, right? This is an M top. This is also another way to look at this. This is your M fractal. If this is a double top, you have key support here at 65. If you were to lose 65 with selling pressure to the downside, it opens up revisiting your low down there at 59.9, okay? That's your M top, but what you're also doing is a coil. And this is why bottoming patterns also trap so many people, because in a linear market, again, linear, we're going sideways in a range. In a linear market, you're looking at what is the bias, upside or downside. So you start looking at patterns, you zoom into smaller time frames, you can add a trend line connecting your highs here to see where you're more bullish if you break above it. You can look at indicators like your 18 RMA, which nailed the top there, your 18 RMA, which nailed the top there, gave you some selling pressure. But overall, for this to be bullish, I did a post on my X at Market Canary last week. You have a W pattern here as well that was forming. For this to be bullish, as long as you hold that low, it needs to break 72K. You also have a bottoming pattern, which again is a 5-wave fractal right here. 2, get a 3, wherever this 4 is. If this is 4, 4 comes down lower to test support again. 5th wave is your breakout to the upside. Look, I think when we break out, if we get a breakout to the upside, if the markets can hold their support ranges, if we get a breakout to the upside prior to any further flushing, the target to me is right here, 82 to 85K. It's right in here at 82 to 85. Why? Because I have patterns that get us there, but additionally, just very simply here, you can pull a fib from the last place you fell from right here at 98K, pull it down to your low. This is the basic way to use Fibonacci. 30618 on there, right at 83,420. From a fractal perspective, from a market structure perspective, you can squish this all in. This structure is going to provide resistance. These candles will provide resistance. That would be my target on a breakout to the upside. First level target, 82 to 85. That's what I would be looking for. Can it flip that? Can it get higher? I don't know. We're not there yet, right? I don't know if the markets are going to hold up. I don't know how quickly the S&P could get to 7,500, which remains my max bull case target. So we have to see, can crypto hold up and chop sideways? If it gets more bearish, you have an M top that if you break 65, you can revisit 59. If you were to flush out, remember I showed you the larger pattern here, down to 52. If you flush out of the support range, this is how Fibonacci works. If you measure the void, where's your 1618 at from this support range right here? It is right here at 52, coinciding with your larger macro pattern as well, Fibonacci confluence. So that's what I'm looking at on Bitcoin. Bitcoin has the same pattern, obviously, as Ethereum has as well, the largest altcoin. Again, just looking at some basic TA, 18 RMA here. Played out beautifully for trend, right? Broke the 18, downtrend, resistance here, 8-hour time frame, resistance here again. So you look at some basic things and you just look at your bottoming structure. We have a bottom here at 1741 was your wick bottom. You rebounded up and you're going sideways. This isn't bullish, this isn't bearish. However, just like the S&P's in a validated uptrend, when you start going sideways, my bias is still to the upside. You can make the argument here that your bias is to the downside because you are in a downtrend even though you're going sideways. Totally valid. But for me, I'm looking at this from Fibonacci perspective and from support and resistance perspective. If this M top that you have right here, if this were to break down and get more bearish, where would it go? If you break 1893 here, which is your neckline, you can revisit 1750. If you level change and exit this trading range, this would mean Bitcoin obviously selling off towards 52. This would mean the markets are probably selling off. The next stop is 1500 on on Ethereum. That's the next stop if you take out this range. However, again, not in danger of doing that now. You are chopping up and down, chopping sideways. People that short-term trade love these markets. People that try to invest hate these markets. Just be patient, because the way a lot of traders trade it, thinking about Nicholas Darvis, thinking about Wyckoff, you wait for key resistance to be broken to enter a trade, or you wait for key support to be broken to enter a short. Okay? So again, that's trending up, breaking key resistance. That's a downtrend from this linear market. Longer term or intermediate term, you're in a downtrend. However, short term, near term, you are in a linear market that can break up or break down. Be patient if you don't want to play the game of which candle's the best candle to jump on. We look at one more thing. We look at Solana here. Maybe we'll look at two more things. We'll see. Solana, same concept, guys. If we are to rebound, we have to take out a key level. What's that key level? $91. That's your recent high. This is your PayPal push. PayPal announced they're using Solana for their whatever crypto exchanges that they're doing, or crypto purchases that they're doing. So they're using Solana. Solana rose up. Solana came back down. Basic TA, low, higher low. There's your low, higher low, higher low, right? That's some basic TA. If you get selling pressure, your support level is 77. Because you have a disjointed M top here. If this broke down and you take out 77, you could be looking at 66 being revisited. And just like I showed you in the last prior two assets, if you were to flush out and just totally bomb out of this area, kill the void and go down more, you'd be looking at 51 as Bitcoin proceeds towards 52, right? That would be a huge drop. But again, not in danger of doing that, but people ask me, so I want to show you. If Solana breaks out above 91, I'm looking at 120s, 121, 125 in this range for your first key level of resistance. And again, if you break this end top and you break 77, then watch for a revisit there at your support of 66. So that's what we're looking at in sideways markets. We're going to go sideways until you see some progress, until Bitcoin breaks out, until maybe the S&P breaks out, until the IGV rebounds. This could take a while. Back half of February, February 19th, typically not very strong in the stock market. So a lot of things to consider. Let's look at one more because I saw this was really popular on X, so I just want to show it. What about HYPE? Hyperliquid. Hyperliquid has a nice support base down here between 28 and 20, this range, right? You see this range. This is a big range, right? But this is the range that you traded in on HYPE before you bounced up, and look how you've been bouncing off of your support. $28 needs to hold here on HYPE. Smaller resistance levels here at 32, and your primary resistance level 34, 36, of course 38. HYPE has to clear this to break out to the upside. And if it does break out to the upside, if the markets proceed towards 7,500, NASDAQ towards 28.2, and you see Bitcoin rebounding up to the 82 to 85, you could see HYPE break out as well. And that next target is $49. This is something I've been talking about in the Discord. If you guys like this type of stuff, definitely check out the YouTube memberships. Would love to see you on the Discord. I will see you all in the next update. If you made it to the end, tell me if this is too long, because Lee's probably laughing. It's like 27, 28 minutes, guys. Have a fantastic week, everybody.